April 21st, 2026. Today's intraday session on SPX was extremely difficult. Just yesterday, we started to see the VIX picking up, and today, that volatility expansion really showed up in full force. So in this breakdown, I want to walk through why today was such a high difficulty environment, what signals were warning us early, and how you can avoid unnecessary losses in this kind of market. Okay, let's review it with the opening read. VIX plus gamma environment. As always, right after the open, I look at two key things. VIX and gamma environment, positive or negative gamma today. VIX continued yesterday's upward momentum. It opened slightly higher, around 19.2, not extreme, but clearly trending up. That alone already tells you volatility is expanding. Meanwhile, SPX opened around 7,120, which technically placed us in a positive gamma environment, but importantly, it was weak. This distinction matters. A weak positive gamma environment does not give you the same stability as a strong one. You can still get sharp moves and fail follow-through. Early price action, first warning sign within the first 30 minutes. SPX pushed up towards 7,130, and right there, you could clearly see strong resistance coming in. This is your first major clue. Price pushes higher, but gets rejected quickly. No clean continuation. That's classic unstable structure. Within the first hour after the open, the market quickly flipped from a positive gamma environment into negative gamma, and the negative gamma exposure kept building throughout the move. That's a major red flag. Let's revisit what I mentioned in my previous video. Once the market moves into a negative gamma environment, dealers are no longer stabilizing price. They actually start amplifying volatility. Instead of dampening moves, they chase price, hedge aggressively, and accelerate both upside and downside. This creates that classic condition. Gives sharp moves, gives fast reversals, gives constant whipsaw. So the big question is, was there any opportunity to profit in today's market? Here's the honest answer. Most likely no. Better keep out of it today. If you were actively trading throughout the day, you were very likely getting trapped by the market. Why most strategies failed today? Whether you were scalping, trading swings, or running neutral strategies, it was exhausting and, more importantly, very easy to get stopped out. The only real intraday opportunity came in the last 30 to 60 minutes before the close. So what actually works? After reviewing this session, here are two more robust approaches. Plan A. Fade the extremes. When price swings to one side of the range, especially near exhaustion, look for reversal trades, then trade against the extreme. But one critical warning, do not sell any directional options in this environment. The risk is extremely high with this level of volatility. Ranges get broken easily, both sides can be tested, and you can quickly hit max loss. Plan B. Be selective before 3 p.m. Before 3 p.m., the key is not prediction, it's selectivity. Wait for clearer structure, better defined levels, or simply do nothing. This is not a market that rewards constant action. Today, I only deployed a very small amount of capital into butterfly structures. Out of all the positions, only one butterfly hit max profit, but that was enough, given the asymmetric payoff. This butterfly only costed 0.75, and the return came out to 9. That's a 12x return. Again, options' final result is multiplied by 100. The GEX peak levels were already largely defined before 3 p.m., even though volatility expanded aggressively after 3 p.m. It did not materially shift the expected closing zone. Again, most important words, in this market, doing nothing is a position. Today wasn't about making money. It was about not losing it. The best trade today was patience.